So where do you see this year? Do you think is there going to be any rate increase? What do you see in the horizon?
The reality is it's not going to go back down for a while unless something big happens.
What is the number one reason that people get declined?
Biggest one at the moment is credit rating. So all these little hits of afterpay.
Are banks really stricter with investors or actual homeowners?
Same guidelines. So same responsible lending, same best interest duties for brokers. So we have to make sure, even though they're buying it.
How tough is it for first home buyers at the moment?
Oh, look, I feel sorry for them. Like, when I got into the market.
Do you see more and more people are like saving more, or are they getting better at doing this, or it's just getting worse?
Getting better. I think they're getting better. I think young ones in particular are getting more savvy, and I think
everybody is talking SMSF. Everybody is promoting SMSF. Is it a good thing or a bad thing?
It was really popular like 10 years ago. Like everyone talked about SMSF. Then probably 5-6 years ago, a lot of the banks pulled out. It was too risky. They got scared.
Does using a broker cost clients money?
Depends what broker you use. So in the industry, we don't have.
Tell us a moment where while this finance situation that you went through and you're like, geez, this is mad, this is crazy.
Oh gosh, so loan-wise, it's pretty boring. We try and stick to boring, but if there's anything I can tell you, we can see what commentary are on your bank statements. So there's a lot of things that people buy. There's a lot of things that people will put down as commentary to their partner. So when we're going through.
One key note to someone who's watching, advice to someone who's starting off in the property market.
Oh, just get in and have a meeting. Like so many young ones, I hear stories.
If I have to apply for a loan, what is a decent amount of salary that I should pay myself to get loan approved?
$2 million.
Probably the business one. Hey guys, welcome to the another show of Studio 9 FC podcast. On our podcast, every week we bring our local businesses and have a talk who are doing some amazing job in our community and helping our community businesses to spread the word out. Our guest today, if you're in the property market, if you're looking for a broker, a bank, mortgage, anything to talk about property, financing is our guest today that we're going to talk. Our guest today is Sara Lewis from Lewis Consultancy. Sara, welcome to the podcast.
Thank you. Thanks for having me.
Good. Thanks, Sara. I know that we work together for some. We still work together with a lot of clients and things like that. But I really want to know where it all started from you. Like, how long ago did you start being a broker?
Oh, you're going to make me sound old. So I've been in the finance industry for 19 years this year. Started out in Emerald in commercial banking, transferred over to Maryborough Hervey Bay and spent about 8 years in 2 of the major big 4 banks. And about 9 or 10 years ago, there was a big shift in the banks where they had really strict policies and strict valuations, and I kept a track of all these deals that we could have been writing for people that we had to either decline or say that we couldn't help them, and it ended up working out to be like 12 million in 6 months. So that's how I became a broker.
Yeah, okay, yeah. So are there rules very strict in Australia to be a broker?
So when I became a broker, I was lucky enough that I had a finance background. So I had to do a diploma still and a certificate in finance and broking. Luckily, because I'd had such a big background in diverse in commercial and residential, I was able to skip the 2-year mentorship. But now, if you are new to industry, they would like you to do the diploma and spend 2 years with another mentor.
So in saying that, is it very different from a traditional bank and brokers? What's the difference between a bank and a broker?
I'll be nice, I promise. Look, I love the banks. We do a lot of work for banks. It's being a broker, though, we've got 44 banks on our panel. So the main difference for us is we're not stuck within their parameters. So they've got policies and procedures that they can follow. It might be their income type that they like, or the property or the postcode. We basically talk to the client, find what they want, find the property that they want, and find the bank. So when I was in the bank, I had to only work in the policies that they could do, or we had LVR or security postcode restrictions. So people out in Howard and Maryborough couldn't get homes because they didn't like the postcode. So that was it. We just couldn't help them. So now I'm a broker. We just don't put them at that bank. We put them at a different bank. So much more solution.
Okay. So in your perspective, in your world, I know everybody keeps saying the property market is crazy, things are going mad, what's happening in property market in Australia. What do you think, in your perspective, what is happening in the market at the moment?
It's going crazy. It's great. I mean, we had COVID come and it elevated all the prices, and everyone was super excited that owned a home at that time and had equity and were able to upgrade. The poor people that were in the market and trying to get into the market were like, oh my God, now I can't get a home because that house was $300,000 and now it's $800,000. But the market itself is crazy, and now more than ever buyers have to be savvy and be pre-approved and go in and know their shelf market and know what their threshold is, and that they can't go above whatever we pre-approve them for and buy, because while they're sitting around thinking, somebody else has put a contract on.
Yeah. So what difference you see in last 3 years with the regulations when it comes to bank? Like when it comes to finance, banking, mortgages, what difference you see in last 3 years? Had things gone really stricter, or it's pretty much kind of the same?
Pretty much the same. Like, it's so funny. Like, you'll hear people talk and they'll say, oh, the banks are so strict now, but they're really not. So the same assessment guidelines are there that they were there 3 years ago. The difference is during COVID, some of the industries that were collapsing. So if you're in hospitality, you were a really high flag. So unless you had a backup job, so unless you did hospitality as your spare job and during the day you were in administration or management, the banks were really scared. But COVID's come and gone. The banks are still got the same restrictions around making sure that we're doing the best interest. So we're looking after the clients. We're making sure that, are they ready to get into this home loan, that we're not capping them at a point that if the interest rates go up, they're going to lose their house. So that's the one thing. Everyone will argue till the cows come home that they hate that the banks have restrictions, but the rates are never going to be the same. So we need to make sure clients can afford it now, but they can afford it in 10 years' time when the rates go up.
Okay, yeah. So where do you see this year? Do you think, is there going to be any rate increase? What do you see in the horizon?
Yeah, I was hoping the RBA was going to hold steady. I thought they might have been a little bit kind and held steady for a few months, but she's gone up early. I think we're going to see another couple of rate rises. Whether it comes on the back of this one, I think what's going to happen is they're going to hold steady and slowly put increments up. I'm hoping that they put them down. Everyone wants a 2% home loan, but the reality is it's not going to go back down for a while unless something big happens.
So when things go, like, let's say 25 basis point or whatever, when it goes up, do you see inquiries lowering? People are pulling back, or people are just curious to know, okay, now what my borrowing capacity is? What happens when interest rate goes up for you guys?
Yeah. So the rate this week, that when it went up, we've just been absolutely inundated with inquiries. So people that have got home loans are concerned that it's gone up. How does that look? Are they going to be able to afford it? Should they fix? The people that aren't in the market are concerned, are they going to get themselves priced out? People are now starting to say, right, in 6-12 months' time, I want to be in a house. How do I do it now?
Okay, and then you pretty much guide them to the process saying, so what is the kind of a timeline that takes for you to close a deal with a client, saying 6 months, a year, you say, okay, come back in a year?
Oh, it could be anything. So we've had clients walking off the street. They have come to us and said, we don't think we're ready to go. And we're like, you absolutely can buy tomorrow. We've had other clients walk in with $5 in the bank and say, tell me how to do it. And we've walked them through. So The longest I've ever had is 3 years.
Okay, wow.
Yeah.
Because they were in a condition with the jobs and savings and everything.
And they might have had a lot of debt, and so that's changed their debt position. We've tried to get them debt down. We've tried to guide them into how best to get into the house, what sort of deposit they're going to need. Some of them have got jobs that are casual. They were only working, 10 hours a week. They've gone and got full-time jobs. Some are self-employed, so we've talked them through how that looks and worked in with their accountants. And yeah, 3 years is a long time, right? But it's probably the most satisfying one that we've done.
Yeah, okay. So tell us, what is like, so if a casual, how long you have to be in a casual position to be eligible for applying for a loan?
So most banks, 6 months.
So for a casual?
Yeah, if you want to open up to a lot of banks with really good interest rates, 6 months is the magic number. But if it's the same industry, so you've left one job and gone to the other one, we can mitigate that with the bank. We can put a story behind, they've been in Brisbane, they've moved to Hervey Bay, same industry. We can show the continuance of income, and 9 times out of 10 they'll look at it and do it.
And for a full-timer?
Full-timer, so we've got some banks that are 2 pay slips.
Is that all you need?
Crazy, hey?
Yeah, so in a full-time position, 2 pay slips, you're happy to get going?
Yeah.
Oh, that's pretty awesome, actually.
I know.
Okay, but it's also dangerous.
And it's good for the full-time people, like, especially if they've come out of uni and they've got a full-time job, they've got no probation, they're ready to go, and they've just gone, bang, I've got a home loan, here you go, here's my 2 pay slips.
And with someone has an ABN, how long does that take?
So 6 months minimum if you want to go to a second tier bank. So there's all different tiers of banks. So you've got your big 4, which are the majors, and then we've got a second tier bank, which are some of the small credit unions, Auswide, MyState, those kind of little credit union banks. And then there's alternate lenders. So 6 months with an alternate lender. The downfall is you either need a higher deposit or you're going to have an interest rate with probably a 7 or 8 in front of it.
Yeah, okay. So it doesn't matter if the business ABN is active or not active?
They're active for 2 years. So if you were walking in off the street and you really wanted to get a home loan tomorrow, ABN 2 years is what the banks absolutely love.
Whether there is any transaction happening or not happening?
Preferably happening. We would love it to be happening. So 2 years full financials, the business is operating, you've paid yourself a wage. Terrific. You're like an ideal client to the bank.
What is the number one reason that people get declined?
Biggest one at the moment is credit rating. So all these little hits of Afterpay, Zip Pays, all the inquiries bring down their credit score. So some banks' credit score, so 9 times out of 10 we don't even get through to an assessor. It'll go through their system, they have a look, the bank deems that they're unattractive and they'll decline it on the spot.
So when you say credit score, what is a green light credit score that you say, yeah, it's a tick on, good, this below this number, you're a danger?
Yeah, they love 800 or more. So what that would be is you've got a car loan already, or you've got Telstra bills and Ergon, and there's no defaults. So a couple of years ago they brought in where now they have reporting. So every facility, so if you've got a credit card, a home loan, a personal loan, for 24 months, it actually tells the bank, were your repayments on time or were you late? So now there's visibility, whereas before you get statements and we'd give you 3 month statements, those 3 months were clear, bank was happy. Now they can see for full 24 months, have you actually been paying on time?
It doesn't matter. So let's say if I'm with ANZ, but if I have to apply for Commonwealth can see how many times I've defaulted.
Yeah.
So it's pretty much one system, everyone can see it.
Yeah, all the banks can see now. So it's quite transparent.
Okay. That's the 800 is the number pretty much.
Yeah, if you're under 800, I mean anything from 600 up is okay. 800 is optimal. That means that you've got good credit. You haven't got a lot of facilities. You haven't been doing inquiries constantly. So you're attractive. If you get around that 400, we need to have a big conversation around stop getting online.
What's the worst that you've seen?
I've had ones where they don't have scores at all.
What do you mean? Like they're so bad?
There's literally no score. It will just have a negative sitting there, and that's it. And we have to do more inquiries. And 9 times out of 10, they might have gone bankrupt. say 5-7 years ago. So it's still on there. Like, people think they go bankrupt and it magically disappears. Like, there's still a record. It could be default. So a lot of people that have come up from Melbourne, Ergon down there, have this terrible, I'm already shaking my head, terrible way of not transferring the accounts constantly. So the clients leave one property, move to another, then they just don't chase them for the bill, and then they just put it in default, and the client's got a default they don't know exists.
So you're saying that any bill, let's say like Ergon bill, I missed an Ergon bill, and they put me on a default, it hits my credit.
Yeah.
Now, how many points we saying?
Oh, it could be anything. It depends how big the bill is.
Like 50 points or 100 points?
Yeah. Sometimes it could be 200 points. So if you're... So for these clients down in Victoria that we had, they had a $167 bill, but it was sitting there for 2 years in default. They didn't even know it existed, and it took 300 points off their score.
And how long does it take to reset?
So good 12. So you can pay it. It shows that it's been paid, but it will sit there for a couple of years.
Oh, okay. So it's not like your driver's license, you get like the point.
So it renews after about 2 or 3 years, but it's still a concern, and it's still something that we have to mitigate with the banks. So we've got to give them a story as to why.
So let's get to the investor side of it. Are banks really stricter with investors or actual homeowners?
Same guidelines. So same responsible lending, same best interest duties for brokers. So we have to make sure, even though they're buying an investment property, how does that look? So a lot of people have a lot of equity and they think, oh, I've got equity, I can just use it. And they go and get an investment property, which is terrific. But 9 times out of 10, the investment property doesn't cover all the costs. So all of a sudden, they're using their personal money all the time. So they're not in a better financial position. So that's one thing we need to have a conversation with clients, and we ask them to go and speak to an accountant and really get their head around why they want the investment property and how it's going to work for them. But the actual guidelines of the banks, when they look at income, servicing, postcode restrictions, it's all exactly the same.
Tell us, so if someone who's listening to this podcast, tell us what are the 3 pet hate things that everybody should get rid of before applying for a home loan?
Oh, Afterpay. Afterpay is great, but it's not being used how it should have been used. So when it was created, it was supposed to be for bigger items. So it was going to replace lay-bys. So, you bought your Christmas presents, you paid them off, and then you had them. But now you can get your eyebrows done on Afterpay. So, some people have got, multiple Afterpays for all these small little niggly things, and then they're spending all their everyday cash out of their transactional banking as well. So sometimes when we look at that, that's a flag to the bank, like you're using someone else's money and you're using your own money. Why? Like, can you budget? Like, what's going wrong? So I'd say to people all the time, get rid of Afterpay, get rid of credit cards, get rid of anything that you don't need that's taking up your time and money.
Yeah, okay. So let me go back to that credit score thing. With the credit score, so it all affects the Afterpay, the credit card, everything.
And just even an inquiry. Yeah. Just constantly inquiring if I could get it.
So how do I know if I have to apply for my credit score? What is my score? If I go and check it, it's going to put my credit score down.
So you can do a Vita check, it's called, and you can go and get a credit score for free, and it won't. It's called a soft touch. So it will let you know if there's any hits. So if you're ever concerned that you've been hacked, you can go on and have a look, and it will show you what it is. But if you're going for the purpose of a loan, an inquiry for like Telstra, so Telstra are the absolute worst and I love pulling them up when I get a mobile phone. So they will do a credit check and they don't tell you. So when you buy your new mobile phone and put it on a plan, they take your driver's license, they're doing a credit check, but they're not telling you they're doing a credit check.
So it's basically affecting your score down the path.
Yeah, so I always say to them, are you doing a credit check on me? And they go, yes. And I'm like, you actually should be asking my permission. So a lot of people just get on, they just apply, say, for 3 or 4 credit cards. They might like the Qantas points and they think, oh, I'll try with Westpac and I've tried at NAB and I'll try it at Amex and I'll just see which one gives me the best one. But it's 3 hits every single time.
Oh, wow. Okay, I didn't know that. See.
Yeah, so people shop and they have the best time, and then we have to go, oh, you've done 18 inquiries in 3 months.
And so every inquiry is actually affecting your credit score.
Yeah.
So in the longer run, that's affecting your borrowing capacity because they say Yeah, okay, whether you use it or not, whether...
And there's a please explain. Like we can see that your client has gone for 2 home loans and 4 credit cards in the last 6 months. Why didn't they get them? And then you've got to do an explanation that, the card wasn't what they wanted, or... So minimise, I think in life people need to start minimising what they're doing. You don't need all these facilities. We don't need all this credit right now. A home loan's a necessity, but putting your eyebrows on Afterpay isn't a necessity. And sorry if you own a beauty salon.
How tough is it for first home buyers at the moment?
Oh, look, I feel sorry for them. Like, when I got into the market 30 years ago, it was $100,000 to buy a house. Now, if they're getting into the market and they've got a renovator, it's $600,000. Like, it's a huge, huge jump for them. A lot of our first home buyers are fresh out of home, so they haven't paid rent. It's a big hit on their budget. So I feel sorry for them. They're up against investors that have got equity and cash, and they can afford to, get the higher end properties. So it's tough, but they're getting in there. And they need to be realistic. A lot of them want to buy the house that mum and dad got, and this is mum and dad's second or third house, and they've taken 30 years to get there. They just need to get in the market.
Yeah, that's right. So what are the current government schemes that are there for people who want to apply for the first home grant and everything? So I know there's a first home grant that is going on, which is, I think, 30,000. Is that correct?
Yeah, 30,000 up to 750,000 build.
Regional.
So those 750s for Queensland. So that's brand new or never been built in, so house and land package. Then you've got 700,000 is the deposit scheme, so that's regional, and you've got to have 5%. So that can be established home or brand new. The only downfall with that one is you don't get the first homeowners grant if it's established. So you can combine the 2 grants, but it has to be new to get the 30,000.
So that's the only 2 grand at the moment.
There is the government, so everyone's talking about this buyback scheme, the government are buying in. The banks aren't buying in on it. So although the government put out a massive amount of interest in October and asked people to register and we will help you buy a home, that's great, but the banks aren't coming to the party at the moment. They're not interested in that scheme.
Do you think that the more schemes comes out on the market, the more property prices are going to go up?
Yeah, it's just driving up demand. And it's like when the first homeowner grant goes up, so it was 15,000, and then when it goes to 30, all the house prices go up.
Yeah, that's what pretty much happened. I think we say it's a vicious cycle that never ends.
I know, and the downfall is like 750,000. You can't buy a house and land package at the moment. I mean, there's builders that are doing it. It's just clients need to be realistic. They're not getting, a 5-bedroom, double garage, 2 living area with land for 750.
So you said it's Queensland. So it's even in cities like Brisbane and everything?
Yeah, so the first time it's grants Queensland-wide. The deposit scheme, that's also a postcode dependent, but regionally we get up to 700,000.
That's all it is, pretty much.
Yeah.
As in the business of financing and everything, which job sector is the safest, easier to get the loans?
Oh, they love essential services.
Like anything to do with government?
Nursing. Government is always going to be an easy job. Nurses, teachers, where they know they've got stable income that's ongoing.
Yeah. And what's the worst kind of job that banks say, geez, they're high risk?
Oh, well, see, COVID's gone now. So no one's really high risk anymore, which is good. It's a choosing, so if you're in construction and you're casual and you're choosing not to work, I mean, at the moment they should all be absolutely smashing it out because it's so busy. But with the weather the way it is, like if it's torrential rain for 5 days, people don't get paid. So those kind of industries are concerning, but then the bank will look at the history, like over the last 12 months, how much have you worked?
Do you see more and more people are like saving more, or are they getting better at doing this, or it's just getting worse?
Getting better. I think they're getting better. I think young ones in particular are getting more savvy, and I think older first home buyers or people wanting their next home in the market have gotten savvy and they're getting rid of debt. They're throwing money into either their current home loans or higher interest saving accounts and getting prepared.
So, as a broker, let's talk about equity. So, how much equity you need in your property to buy the next one?
So 80% is where they like to lend to of equity, and then anything over that, lender's mortgage insurance comes in.
So, let's say I bought a property at 600,000.
You think on a Friday night?
I should have got that glass of wine. So 600,000. Let's say you made 200,000. Now the property is worth 800,000.
Yeah.
So now you got 200,000 equity. Is that correct? Am I right there or?
Yeah, so basically you'll just have your 800,000 and you want to go up to 80% of that, which is
Whatever it is. Yeah, okay.
so then say you had a loan for 200,000 against that property, you've got about 360,000 in equity that you can use towards the next one.
Okay, so that's how the calculations is done. And then they check if it's an investment property, then what gets added to it, then your income and all.
And you can borrow over 80%. It's just you're paying lender's mortgage insurance. So then you've got to start weighing up why. Like, why do you want to pay that insurance? Do you want to pay a $10,000 policy for a lender's mortgage insurance company, or you could just wait 6 months and save it? So they're the kind of conversations we start to have.
Do you get better deals from banks when you are a heavy hitter or a heavy investor? Like you got 6-7 properties, all rented out. Does it help with getting the mortgages more loan, or is it first time home, like first time property buyers are more riskier than investor who has 10 properties?
So they definitely prefer, so you'll hear people talk about an LVR. So if you hear over in the industry, they'll throw around an LVR. So it's a lending value ratio. So basically the higher that your loan is to what your security position is, the higher risk you are to the bank. So they'll charge you a higher interest rate. So anything over 80% riskier, so you'll get a higher rate. Anything under 70% is less. So we actually have a fantastic employee, Patrick. He comes in 2 or 3 afternoons a week. It's his only job to price up our entire portfolio. So it doesn't matter if you have a $50,000 loan or a $5 million loan, you're getting priced every 3 months. So we go to the bank and say, hey, we just noticed you're with Commonwealth Bank, you're sitting at 6.2, you're offering a brand new customer off the street 5.8, we want that price. So, yeah, I mean, I've got a guy with a...
So you do that for your clients?
Yeah, so our database, yeah.
Which is awesome. But so that means because a lot of people don't do that. Like banks never contact you if the interest rate goes down because they're making just money over there, so.
Yeah, that's right. So we've seen clients with so the interest rate's 5.2 and they've got an interest rate of 7.6 and they had no idea, because it's just sitting there and no one has time to go and check it. So if nothing else from the podcast, if you go and check your interest rate, just go have a look and see what it is. If it doesn't have a 5 or a low 6, you're getting ripped off.
So tell us, because you said you deal with 40 banks, correct?
Yeah, I know, a lot.
That's a lot of banks, and there's a tier system with the banking, So who's your 3 favorite banks?
Love Macquarie. For a few reasons. They've been the lowest in the market for an interest rate for quite some time. They like to pass on interest rate cuts when we ask them to for our clients. So if they're existing, they don't give us pushback like other banks saying, oh, well, that rate's for a new client off the street. They'll happily match it. They've got a fantastic platform. Their turnaround times, we've had approvals in 2 hours.
Yeah, wow.
So, when you put it in and 2 hours later they're ringing to say it's approved and we're like, oh, that's awesome.
So in saying that, what is on an average time that takes to get a loan approved nowadays?
Oh, so we're pretty strict. So it all comes down to how the broker or the banker puts it to the bank. So we won't put it in unless it's ready to go. So, and what I mean by that is you've got a contract to sale, evaluation, all of your income documents are together. We've done all the broker explanation notes and then we submit it. Some people like to put it in earlier, so they'll put it in to start and then they order evaluation and you wait 2 to 3 days and then you wait for pricing for 2 to 3 days and it just drags it out. So we sort of get everything up front of the client and that makes them motivated, right? Because if the clients want things done quickly, they'll give us all the loan documents that we need. And then we position it all to the bank and follow their checklist. So they actually give us a guideline. If you want this to be picked up and looked at in a smooth transition, these are all the documents that we need. So normally, I mean, 4 or 5 business days at the moment. Like, they're getting a lot of inquiries. There's a lot of refinancing and shuffling around with the interest rates the way they are. But yeah, Macquarie was like 2 hours. On average, Macquarie's 24 hours, which is amazing.
Yeah. So we got Macquarie. What's the second one?
I like Bankwest. Bankwest, the only thing that is a downfall with Bankwest is we don't have any branches. Macquarie, we don't either, but all of Bankwest are now over back in WA. So they've got both Macquarie and Bankwest have up to 10 offsets that you can put against your account. So they're free, they're part of it. I tell people set everything up that you can. Put your kids' accounts against your home, put your holiday account, rates accounts, like make your money work for you and lower the interest on the home loan by putting all that money against it. We've got a fantastic business manager at Bankwest who picks up the telephone, has a chat, and is happy to work all the different scenarios. They've got excellent policies for casual. They're one of the ones that 2 pay slips, happy to approve. So they're my number 2 bank. Number 3, Auswide. We're super lucky to have a branch here locally. The branch here are fantastic with our staff. They'll onboard them. They'll make sure they understand their internet banking. They double check all the accounts are set up perfectly. If they've ever got an inquiry, they'll answer them. Some banks won't talk to them because they've come through a broker. And then if you wanted, my 4th bank, even though you wanted 3, for like a second tier lending. So if it's an alt doc, so if you're self-employed and we want to use 2 BAS and an accountant letter or some bank statements, Bluestone are amazing as well.
Oh, wow. I've never heard most of them.
I know.
Yeah.
Because people are so hung up on using the big 4.
Yeah, exactly right. Yeah, because and that's why be talking to you, because this is where we get to know more about different banks, because they're not out there, because the big 4 banks are so loud that everybody just knows these 4 banks, which is very, very interesting because...
I know. And I think there was a bit of stability. Like a few years ago, people were worried, are the smaller banks going to close? Maybe I should leave all my money at the big banks. But I mean, Macquarie's been around for a long, long time. Bankwest is a subsidiary of Commonwealth Bank, so they've got a huge backing if something goes wrong. Bluestone, they've been around for quite some time as well, and they're very picky when they do the alt doc self-employed clients, so they're normally a higher risk client. They'll price accordingly and they really knuckle down and have a good look. So their portfolio is already always looked after, and they've got an excellent business manager who is more than happy to try and get as many clients in Hervey Bay into her portfolio as possible.
I always wondered, this is a very broken question, like when you go to different brokers, some brokers can get you much better borrowing capacity than the others, but they all entering the same number.
Yes.
Same documents, same thing. Probably. So what happens, like how come some brokers can get much better borrowing capacity than the others, or the loan gets approved quicker than the other one?
So it could come down to banks. So brokers that perhaps don't have the same banks on the industry. So we have different banks, say to Mortgage Choice. So Mortgage Choice have a few different ones that we don't have. They've got Liberty on their panel. We don't have Liberty. So they've got that option. Sometimes brokers have been in the industry too long and they just stick to their same banks all the time, and it gets declined because that's not the right fit for a customer. So as brokers, like, we've got to constantly keep educating ourselves and making sure that we know what's going on and that we don't get comfortable with just using Macquarie all the time because they're quick and they've got a great rate. Like, that's not every customer's cup of tea. So the other thing that we've got to be careful of is there's still cowboys in the industry. So I hear horror stories, clients will tell me that, oh, well, that broker would drop off a child so that we could get the home loan through. And I'm like, eh. So, our guidelines are really clear around the expectations of compliance and how we should be entering and, not committing fraud. So if clients have got 2 kids, you've got to put 2 kids in. It's not worth your licence or risking. So the only time that we ever have any issues around borrowing can be self-employed. So someone might interpret it different. They might look at different income to what I'm looking at, or vice versa. So sometimes we can add back, say, depreciation and interest. Another broker that hasn't done commercial banking might not have known that and missed out.
Someone with an ABN, if I have to apply for a loan, what is a decent amount of salary that I should pay myself to get loan approved?
$2 million.
Probably the business won't.
I know, it'd be great. So when you're self-employed, like I always think your benchmark is your industry. So if you can earn $100,000 working in the hospital in management, you should be earning $100,000 if you're working in the hospital as a subcontractor in management. So if you're only earning $40,000, we're like, what's going on? And it could just be lifestyle. Like you might be doing 2 days a week subcontracting, but I mean, more is always better. If you're in a company, are you paying yourself a wage? Because if the answer is yes, we can use the wage. We don't need to use the company's income. So there's banks that will look at directors paying themselves a company wage regularly, and we can use that income to service the loan. But 80,000, 100,000, 2 million.
Is it hard to get loan to someone who's on ABN?
It used to be. I think it's much better than it was. When I first started in the industry, it was just an absolute nightmare. If you were self-employed, you just didn't get loans. Like it was just that black and white. I remember clients coming in and we were basically like, you need to go get a job in the industry so I can give you a home loan. But now the banks are being a little kinder, like they understand a little better that it's a catch-22, right? Like you run a business, you want a lower net profit because you don't want to pay tax, but I need you to pay tax so that I can show that you're making a profit. So it's a good conversation to be having with a self-employed person 12, 24 months out before they're going to start looking at home loans and saying, right, well, here's the payoff. You either don't pay tax and I can't get you a home loan, or you run everything through the books. We show that you can make some money and we can give you a loan.
And can people borrow from their business to buy a property, like a property and everything? Because I sometimes I thought that business is business. They like to keep it separate. I think home loan is home loan, business loan is business loan, and stuff like that.
Yeah, and that's like we would advise them to go talk to their accountant, because anything that you take out of your company is an accountant's type question. The business can absolutely buy like a home. Like you can buy commercial premises as a company, or there's self-managed super funds that are buying premises for their company to come in and work out of. But into money, like the company lending personal money to buy a house, that's a big accountant question. That's an ATO issue.
So someone has let's say $500,000 equity in their house, can they go and buy a business?
Yeah.
So they can buy a business with
They can do a business loan and then use the house as equity.
Okay. Yeah. So let's talk about SMSF, which has become very. It's everybody is talking SMSF. Everybody is promoting SMSF. Is it a good thing or a bad thing?
It was really popular like 10 years ago. Like everyone talked about SMSF. Then probably 5-6 years ago, a lot of the banks pulled out. It was too risky. They got scared. The big four aren't back in SMSF lending still. We've still got like Latrobe, Better Mortgage Management. There's still like 5 or 6 bigger lenders that are in it. But SMSF is risky in that you need to have a good accountant to explain to you what the ins and outs are. So a lot of people think, I know, I'm going to put my kids in my house down in Brisbane and I'll just buy it under my SMSF. And then when they talk to their accountant, they realise they can't rent. So it's got to be at arm's length. You can't rent to your children or your family. And it has to be rented at market value. So all of a sudden that's not attractive anymore.
So if I buy an SMSF property and I want to rent my kids onto it, I can't do it?
No.
It has to be someone someone different.
Yeah, it's going to be a third party.
And it has to be in the market value, the rent.
Yes. So you can't just go buy commercial premises and, the market might dictate that you get $40,000 a year for that rent and you can't put your company in at $20,000. The company has to pay market value.
And how much money you need in your super to, let's say, to buy a $800,000 property?
They used to say 500,000 way back when it was, if you didn't have 500,000, no banks would look at you. But now it's 20%.
Okay.
Which is good. Yeah. So you have a 20% deposit out of your super, and then make sure that we've got to make sure that the super is able to. So same guidelines work as a personal lending. So can the super fund make the repayments on the home loan or on the super loan, basically? So it'll get either a commercial premises or it might buy a residential investment, and then we have to have a look: can the rent sustain the payments back to cover the loan? Okay. And if not, what personal contribution are you putting in to cover it?
So you can do still a personal contribution if...
Yeah.
I think this whole SMS stuff, we can probably go on about it and it never end.
I know. I could bring a few accountants in, they could tell you all sorts of stories. And because that's not my expertise in the ins and outs of what the ATO and ASIC will let you do, I'm always like, yes, I could just buy this and renovate it, and then you sit down and there are quite a few parameters. But if you do it and you do it well, it's a great little cash cow for your super fund.
Yeah, okay. Yep. Now, does using a broker cost clients money?
Depends what broker you use. So in the industry, we don't have any guidelines around whether you charge an upfront fee or not. So you might hear people say, oh, I had a fee for service, or I had an appointment with a broker and they charged me a fee to have the appointment. We don't charge a fee. So the clients that I get are mostly referred by friends and family or business acquaintances. So they're good clients that we really want to help. So we don't charge an upfront, but I know other brokers do, and that's just their business portfolio. The interest rates, the ongoing fees, all the repayments, there's no difference there. So the bank covers our commission costs. Clients aren't out of pocket at all paying. The only time you may pay is if you're doing a commercial or an SMSF where there's a lot of extra work. So the brokers will be upfront and say, hey, there's a fee that's going to be paid.
Yeah, okay. Yeah. Tell us a moment where while this finance situation that you went through and you're like, geez, this is mad, this is crazy.
Oh gosh, so loan-wise, it's pretty boring. We try and stick to boring. But if there's anything I can tell you, we can see what commentary are on your bank statements. So there's a lot of things that people buy. There's a lot of things that people will put down as commentary to their partner. So, when we're going through, so we get 3 months of your bank statements, we go through and look at your living costs, and sometimes we're like, oh, that's a bit funny, or wow, I can't believe they brought that there, or so yeah, that's one thing that makes us all have a little laugh.
Yeah. I know that you must be having a lot of rewarding moments in your brokerage thing, like when a first home comes in, a first kid buying his first home, things like that. Share a story where you felt like, geez, this is worth being a broker.
Oh, I feel like it sounds really corny, but I feel like they're all like that. Like, it's such a rewarding job because people come in and they want help in some capacity. Like, no one's coming to me unless they want money. So they're either wanting to buy their first home or their next home, or they want to talk about how to build personal wealth. And it's really cool because we get to look at them from the beginning, and if we can't help them. So if you came to me and you're with, say, Commonwealth Bank, and you're on a smashing rate and you really don't not like the bank, it's just your friend told you to come talk to a broker, we won't move you. We won't move you just for the sake of moving you. So we'll say, hey, like, that rate's actually really good. That product's exactly what you need. You're better off staying where you are, but touch base when you want to. But probably the most rewarding person I had a single mum. She was self-employed, so she just started her business. She had probably $1,000 in the bank, and she was like, I want to get into the housing market. And it was before COVID, so she was lucky that house and land packages, were $350,000, $400,000. And she's my lady. I worked with her for 3 years, and she would ring me and say, I want to buy a vacuum cleaner. Is that okay? I'd be like, yeah, that's fine. That's no dramas. And we would literally every 2-3 months, we'd look at a position and go, that's awesome, look at that deposit. Now you've got $10,000, say, put that $10,000 in a term deposit, and that can make money for you. Now let's start saving again. And then we'd start looking around what sort of house and land packages she wanted to do and how she could afford it and why she wanted those, and was it the best area. And quite a few times we'd say, look, you're ready to go, but that area that you're picking isn't what you want. Like, you told me you want to live close to school, and you're not, like, that's nowhere near where you want to be. So we finally got her a property, and it was like awesome. She was crying. We were like super stoked. She's still on the books. Like, she was one of my first customers 6 years ago when we became our own company, and she's still loving her house. Her house has probably got $300,000-$400,000 in equity, and she won't sell it. It's just the principle that she just wanted to get into the market and had no idea how to start.
Do you get a lot of people switching banks?
Yes and no. Like, a lot of people will think that they're not on a good rate. So there's a lot of talk at barbecues like, oh, my rate's better than your rate. And, like, we'll have a look and we'll say, okay, that rate's actually really good. So are you unhappy with your bank? And they'll go yes or no. I mean, sometimes I'll say I'm not a good broker, right? Because it's my job to make money by changing banks. But if there's no purpose to change a bank, my theory is it costs you about $600 to $800 to move. So the bank will charge you a discharge fee and the government charges you a registration fee. So if I can't save you $800 or more, I'm just moving you for the sake of moving you. And then a couple of years down the track, you're going to go, hey, I was no better off. Why did you bother? So
Does the interest rate change based on, let's say, me and Jinto, we are on the same pay package, but I have boat loan and all that stuff, and he's pretty clean. Will my interest rate changes, or it kind of stays the same?
it should stay the same. And it's really the that LVR position, so that security position. So that's one thing with Patrick coming in doing our interest rates, that he'll look and see. And you know, like some people brought in, they had 5% deposits, so they were 95%. So they were sitting at 6% when everybody else was at 4.89 or 5%. But with the equity and the position of the security going up, we're able to do a valuation and go to the bank, hey, they're no longer a 95% lend, they're an 85% lend. Like, we want a better interest rate. So that constant checking and making sure that they're on the best rate involves making sure their security position is accurate, and then we're able to knock a fair bit off. So the less risk to the bank, the better your rate's going to be.
Now, but probably we can go on and it will never end because I have so many questions going in my head.
We'll have to make an appointment, right?
I'd rather ask all the questions here. All right, we're going to get back into a quick rapid fire round. I just want to know, so fixed or variable?
Variable.
Big deposit or get in sooner?
I think get in sooner.
First home or investment?
First homer.
Save harder or earn more?
Save harder, I think.
Apartment or a house?
Either. Just get in the market.
Refinance every few years, yes or no?
I think you should be checking every few years. I think you should be making your broker or banker like accountable now, like every 2-3 months. If someone's not ringing you saying, or emailing saying, hey, I checked your interest rate and it's the best I can do, you've got to be asking why. So I don't refinance just for the sake of refinancing. Like, if you like your bank or if you're not super unhappy, I would be staying where you are. You don't want to lose $600, $800 for no reason. But if you don't know what you don't know, you could be doing better.
One key note to someone who's watching, advice to someone who's starting off in the property market.
Oh, just get in and have a meeting. Like, so many young ones, I hear stories that, you know, they think that they're not ready and they've gone and blown $20,000 on an overseas holiday and they could have got into a house. And the market is moving so quickly and the prices are, they're not doing the big $100,000 jumps, but they're certainly still jumping, you know, a fair bit more than you probably want them to if you're in the market. I think if you're thinking about buying in the next 12 months, now's the time to start asking questions around how do I get in the best position.
And how can they contact you?
Either on our Facebook page, so Lewis Consulting and Finance, or jump on our website.
Oh, guys, well, if you're looking to get in the property market, ask any questions about whether how much you can borrow, what's your credit score. If you're looking into property buying, if you're first home investor, doesn't matter. Lewis Consultancy here is help you. And so Sara is based locally here in Hervey Bay, or you do interstates and everything, right?
Everyone, yeah.
Anyone everywhere. If you're looking in Australia, if you're looking to buy a property, contact them. We'll have all the details below in the video, the links here on the video. And if you watch the podcast right at the end, thank you very much. Do like, share, and subscribe because they do take a lot of time and effort to make them. Sara, thank you so much for coming to the podcast.
That was awesome. Good fun.